Hello dear traders, you are watching a video review of the Asian session. Today we are going to briefly talk about the Great Depression, find out how the federal election may affect the Reserve Bank of Australia's monetary policy decision, and discuss the results of the Asian session. Let's start. Yesterday, US Treasuries closed one of the worst quarters for total returns in the past 157 years. The only period with the worst quarterly returns for 10-year notes occurred in the fourth quarter of 1931, during the Great Depression. Apart from that, the main US stock indexes tumbled at Thursday's close. The drop took place not because of a negative geopolitical news. Investors seemed to reconsider the prospects for monetary policy tightening. They decided to revise their portfolios in favor of safe haven assets amid risk aversion. Stocks were also affected by Joe Biden's decision to carry out the largest oil release in history from the country's strategic oil reserves. By this step, the US president hopes to solve the problem of rising energy prices worldwide, and US stock futures edged higher in Asian trade after Wall Street closed out the first negative quarter in the 2 years. Apparently, speculators are anticipating the non-farm payrolls report to guide the outlook for monetary policy, and this is why the trajectory of the key stock indexes will be more clear in the US session. On Thursday, the US dollar slid down. However, after a sharp drop in stocks, the greenback asserted strength. In the Asian session, it was consolidating in the range of 98.31 and 98.61. Like Wall Street traders, Forex One also awaiting non-farm payrolls data. The movements of the US dollar hugely depend on this report. Strong jobs data will increase the likelihood of more rate hikes in the future, and it's extremely bullish for the US dollar. However, the US dollar is still weaker against its major rivals for a number of reasons. We mentioned them in our video review yesterday. In the Asian session, the US dollar index, which measures the strength of the greenback against the basket of 6 main rivals, was trading at 95.50. The Fed decided to curb surging inflation with high interest rates. The Bank of Japan did not oppose it. It keeps the key rate at an extremely low levels. In March, Japan's economy showed the best performance compared to other economies of the Asian regions. While the operation of many Asian factors slowed down due to soaring commodity prices and the lockdown in Shanghai, the Japanese manufacturing sector in March expanded at a faster pace. To boost the economy, the Bank of Japan pledged to buy an unlimited amount of 10-year government bonds in the last days of the financial year. The Bank of Japan has set an inflation target, yet it did not do the same for the key rate. This is why the recent decline in the yen may affect the Japanese economy. Moreover, due to rising commodity prices, input price inflation in the country has accelerated to the highest level since August 2008. As a result, inflation soared as well as the output price index, so the yen is still weakening against the US dollar. After falling at the beginning of the week to the lowest level since November 2015, the yen managed to slightly halt its drop. Today, the dollar-yen pair is trading at 122.65. In the Asian session, the price may rise even higher to the upper limit of the daily range of 121.64 and 122.73. While the US and Japan's central banks have more or less decided on the future of their monetary policies, the Reserve Bank of Australia is sitting on the sidelines. It's unwilling to take any action. The main reason is not galloping inflation. The country is preparing for the federal election. It must be held to no later than 21 May 2022. Therefore, expectations of an interest rate hike by the Reserve Bank of Australia are growing. However, Reserve Bank of Australia Governor Philip Lowe is likely to prefer not to change monetary policy ahead of the election and after. The last time the watchdog changed the key rate was in 2019 after the previous federal election. And the Australian dollar keeps extending losses after a steady rise. It stumbled also due to an increase in the shares of the mining companies, metal prices and risk aversion. Traders preferred a safe haven US dollar. In the Asian session, the Aussie fell to 0.7530 and the AUD USD pair was consolidating within the range of 0.7474 and 0.7504. The price seems to have entered the green zone at the end of the trading week. And that's all for now. We hope you have had a productive week. Perhaps you have made some profitable trades thanks to our video reviews. Feel free to leave your feedback and see you soon.